Let's start with Nestle. This is a big Swiss-based company. It's one of the world's largest players. We'll talk in a minute about all their areas of operation. It's been around forever, established in the 1860s by a fellow whose surname was Nestle, based in Vevey is the name of the town in Switzerland, but global operations, global brands, and global production as well. Market capitalization, $241 billion. So this is one of the big boys on the global market. It's listed in Switzerland, but also tradable in New York, so you can buy them either here or there. Dividend yield is 2.99%. Price to earnings ratio 16, so sort of in the middle of the field.
Yeah.
Let's go into their areas of operation. I mean, it is really, I've got my notes here, $43 billion worth of sales, but the big bits are coffee,
Yes.
which is Nescafe, Nespresso, and all of that stuff. Dairy products.
Yeah, water, which is
And
a big
water,
one.
exactly. That's a big one. And of course, margins on that are
Yes.
fantastic. That's Perrier and all that sort of thing. Pet food.
Pet food, yeah.
Ice
I saw
cream.
that. Ice cream, all the nice things that you wanna consume.
Chocolates, although I suppose
Yeah.
people are getting off chocolates
Well,
these days.
you're right. So
Sort of.
they've actually just entered into a new sort of area of luxury chocolates in Switzerland. So they've normally just been like the sort of the
Kat
middle
and
of the
sort of
market
basic
chocolates. Now they're
entry-level
going
stuff.
into the higher end.
Yeah.
So that might do well for them. I think people, if they still eat chocolate, they prefer the sort of purer chocolates
Yeah.
these days. So yeah, very big company. I mean, they earn roughly about 50% of their income from developed countries, the rest from emerging markets.
Yeah.
We know that trading conditions in the emerging markets for them have been slow, but still they've done particularly well. They also have a stake in L'Oreal,
Yes.
and that's done well for them. I think if you look at the price and you strip that out, they're even trading much more reasonable, you know, without that sort of investment, but a good sort of holding.
Although it
overall.
appears from the portfolio that they're not really aggressively trying to enter the pharma and healthcare, beauty products kind of stuff. It's more
No.
oriented towards the food side of
Definitely.
things. Yeah.
So I also think, you know, they haven't given any indication that they're trying to move away from L'Oreal and just focus on core areas, because I don't think it's done particularly well for them. So yeah, I don't think they have any need to sell it off. Still fits the stable.
Well, the graph will come up in a minute. So you can see it's been a little bit soft in recent times, but
Yeah.
probably due for a little bit of price improvement because some of their core markets are starting to look a little bit better. But
Yeah.
yes, I mean, they operate, as you said, 50-50, so that's interesting. They would compete in a market like South Africa
Yes.
with the local players like Tiger Brands and so on, and then some other international companies like Unilever, Procter & Gamble, and so on and so forth.
Yeah.
Okay, so in summary, I guess the question is why pick this one? Are you hot or not on Nestle particularly? Is it high up on your list?
Yeah, I'm actually hot on it now. I think the valuation has come down. If you look at the earnings growth, it's still been there, and the price has actually not followed the earnings of late. So that's why we're seeing the price earnings at 16 at the moment. So I think I'm going to be hot on this.
Just one thing I want to point out about Nestle. Like Richemont, it's Swiss-based. That
Yes.
means there is a very high 35% dividend tax.
Yeah.
And in theory, you can apply to get the difference between that and the South African dividend withholding tax of 15, but it's often very difficult, bureaucratic, and so on.
Yeah, it's tedious, but it can be done without a lot of hassle. You just need to fill the forms and get them
Follow all
submitted.
that
So
through.
that's basically it. I think, you know, it's definitely worthwhile. You're scoring about 20% when it comes to that tax. So
Obviously, the bigger your
yes.
position, the more it is worthwhile.
more it makes
if it's a
sense.
couple of $100, you
yeah,
might
it's
as well
not
laugh it
gonna.
off.
Yeah, but I doubt then that you're actually gonna hold shares in a company offshore.
yeah.
But yeah, I agree with you, and I think that if you look at what, like I said, the price have done lately, it's looking attractive in terms of acquiring now.
Okay, good. Right. We're